So when I look at in the Bitcoin space, it looks like that still has room to run. And then I generally expect, both politically now, there's some green lights on it, and then also liquidity wise, while there's potentially some bumps in the road, I don't really see like a major negative turn in liquidity, and therefore I generally expect that we probably will see higher highs in Bitcoin this year.
Lyn Alden starts out with outlining liquidity cycles and their effects on financial markets as a key problem in the contemporary economic environment. Although sentiment and speculation frequently impact short-term market movements, she notes that the interplay among fiscal deficits, central bank policies, and money supply trends continues to be the primary driver. As central banks work to control inflation and governments continue to run large deficits, the macro environment is moving towards systemic monetary debasement. According to Alden, this dynamic shapes the long-term investment picture and has significant ramifications for assets like securities, gold, and Bitcoin. Please take a moment to like this video, subscribe to the channel, and enable post notifications for more similar insights before we delve deeper into Lyn Alden's observations. Thank you, and enjoy the video.
Where do you see Bitcoin coming into any of those potential dynamics? And then specifically the idea of the US itself running a strategic Bitcoin reserve.
So in the intermediate term, I think that Bitcoin is still too small to be super relevant for the things we're discussing here at a 2 trillion market cap. It's probably still too small to really kind of enter these discussions. Now, any sort of decisions around strategic Bitcoin reserve are probably separately considered than trade for the most part. And so, while that could be certainly beneficial, it's certainly beneficial for Bitcoin price. And if I was advising any entity, whether it's a corporation, whether it's a family, whether it's a country, it'd be like, yeah, you probably should have some Bitcoin. If your goal is to maximize whatever thing that you're running, owning more Bitcoin is probably going to benefit you in the long run. So we'll see how that goes. If we look out long enough, then things like Bitcoin and having a Bitcoin reserve can actually affect some of these trade dynamics, because one of these solutions to having a structurally overvalued dollar and therefore a structural U.S. trade deficit is to instead have more international contracts and more international reserve stored in neutral reserve assets. There's basically two methods. One is you either have a more multipolar currency world. So you say, okay, so some reserves are in dollars, others are in euros, others are in Chinese yuan, and a couple other major ones. Or excess reserves and storage are kind of held in gold or Bitcoin. And now the problem is that the current the upcoming Treasury Secretary has specifically said that they want to keep the dollar as the global reserve currency. They want that sanctionability. And I think that's where there's some competition. You say, well, we want to reduce the trade deficits, even though the trade deficits are what supply the world with dollars to be the world reserve currency. But we also want to keep the reserve currency because we want to be able to sanction anyone we want. And those are kind of competing dynamics. Now, maybe, decades ago during the Cold War, it was more advantageous to have the global reserve currency than to not. But now that the negatives have kind of accumulated and are front and center in politics, in some ways, ironically, the downsides of being the primary reserve currency might be outweighing some of the benefits. It depends who you are. If you're the U.S. government, you want reserve currency because you want to be able to sanction anyone. If you're Wall Street, you probably want the world reserve currency. But if you're industry, you're kind of the one that's on the wrong side of this whole apparatus. And one of the solutions there is basically say, well, instead of all these countries storing excess savings in dollars, treasuries, and U.S. stocks, save them in gold or Bitcoin or other types of global assets. But that's more of a conscious trade-off that I don't think this administration wants to make. The prior administration didn't want to make it. So I think it's probably a longer-term process, and Bitcoin has to get much bigger before it really enters those types of discussions as a kind of a reserve asset at scale. Right now we see El Salvador holding it. We see the Kingdom of Bhutan holding it. Potentially some Middle Eastern countries holding it. But in order for it to be like this, massive reserve holding among countries, I mean, at least has to get half as big or as big as gold. So basically have to add another zero to market capitalization, and then it actually starts kind of being really relevant as potential alternative as like a large scale reserve asset. So the biggest things I would watch, one is global liquidity. Now the potential risks to global liquidity are tariffs or anything that would spike the dollar. But that's offset by the fact that we have a president that generally wants higher asset prices, that would generally not want a super strong dollar because he would perceive it as going against his trade policies, and you would potentially even label certain other countries as currency manipulators if they let their currency weaken too much relative to the dollar. So these with some bumps in the road, I expect decent liquidity this year, which probably is supportive of Bitcoin and gold. And then I also look at things like, kind of Bitcoin's own metrics. So when I look at, say, market value compared to on-chain cost basis, so market value versus realized value, I like to look at those types of ratios to see kind of how euphoric is the network. And so far, it looks nothing like prior major multi-year tops. It looks kind of middling in the road in terms of that metric. Similarly, when I look at, whenever there's a major bull run, there's like the hodl wave. So how, what percentage of coins haven't moved in over a year? And when you get a major bull run, that number starts to dip because you have a number of long-term holders that are up 5x or 10x or 20x in their position, and they start trimming into that strength, and new buyers are buying into that strength, and that eventually can exhaust new buyers. And the rotation we've seen is still smaller than prior major cycle tops. So when I look at in the Bitcoin space, it looks like that still has room to run, and then I generally expect both politically now, there's some green lights on it, and then also liquidity wise, while there's potentially some bumps in the road, I don't really see like a major negative turn in liquidity, and therefore I generally expect that we probably will see higher highs in Bitcoin this year.
According to Lyn Alden, gold's reliability and lengthy history in the financial system make it the preferred choice for sovereign governments as a reserve asset. Since gold doesn't depend on liquidity or quick transactions, it is a safer choice for nations wishing to transition away from weaker currencies. Although Bitcoin is expanding and may someday rival gold, Alden thinks that because gold is tangible and not digital, it will remain a crucial hedge against significant economic downturns and cyber threats. To remain up to date on the most recent developments in Bitcoin, cryptocurrencies, and the digital economy, please take a moment to like this video, subscribe to the channel, and enable post notifications.
Where do you see gold fitting into that dynamic?
Well, I think gold's been benefiting the past few years because Bitcoin's too small. So when these countries want to, around the margins, de-dollarize at the sovereign level, gold is their obvious choice for savings that they don't need to be very fast, right? So they can hold them long term. The bigger Bitcoin gets, the more it starts to compete with gold potentially. Around the margins, I think it's already competed with gold a little bit, but actually I see more indications that it's competed with silver, platinum, and gold miners. Because if you're a hard money enthusiast and you have a bunch of options for things you could previously invest in, it'd be gold, silver, platinum, the miners. Generally, if you want low volatility, you go with gold. And if you're more bullish, you want that higher volatility, if you're more of a trader mentality, or just want that kind of, you're more bullish, you go with the higher vol things. But now with Bitcoin, it's higher volatility without the operational risks of being a gold miner or, things like that. So I think that actually some of those higher vol hard money assets have been more directly impacted by the existence and growth of Bitcoin and to some extent the broader crypto space. If you start to get bigger and bigger with Bitcoin, then potentially starts to challenge gold more directly. Probably not for quite a while. And then even in that scenario, kind of like how gold is always like seen as like the hedge against some sort of major economic issue, you could see gold as like the hedge against some sort of major cyber attack or something. People, there'll still be entities around the world that say we want to have some analog wealth stored rather than, put every single thing on this network. So that it certainly still could be seen as like a backup option and just a different type of backup. So I still think that compared to the global bond market, gold can still grow into that, even as Bitcoin is on its flank, kind of growing into gold to some extent, which is decent liquidity conditions and ongoing fiscal dominance in the US, which is leading a lot of things to run hot, ranging from nominal GDP to asset prices. And a couple of the key things I'm watching for 2025 is basically anything that would change the course of that or give us some wiggles along that path. And so one of the things I'm watching first and foremost is the debt ceiling issue. Not because I expect much out of it in the long run in terms of all the defaults and stuff that can happen, but rather because when the debt ceiling's being contested, the Treasury has to do extraordinary measures, which they started this week. And that basically means that they have to drain cash from their account back into the system in order to keep paying their bills without issuing that new debt. So the longer that goes on, that's a liquidity factor, which can then translate into asset prices and other things like that, financial conditions broadly. And then also the one of the biggest things to watch is tariffs. That's potentially an all year thing to watch, but especially in the first few weeks and months here, to see any sort of announcements around that. So I get a lot of questions around what's the Fed going to do. We obviously have an upcoming Fed meeting, but in this era of fiscal dominance, I pay a lot more attention to some of these other factors, even though, of course, Fed decisions still matter. But at the end of the day, fiscal matters a lot more.
Lyn Alden points out that because Bitcoin is still too small to be a practical substitute on a large scale, gold has continued to be the chosen reserve asset for sovereign states. Since gold doesn't require speed or liquidity, it makes sense for long-term savings when nations want to diversify away from the currency. Although Bitcoin is starting to compete with gold, particularly among institutions and individual investors seeking a high volatility substitute, Alden points out that it has probably had a greater effect on miners of gold, silver, and platinum than on gold itself, because it offers significant upside potential without the operational risks connected to mining stocks. Bitcoin is appealing. Alden stresses that gold will still be a hedge against significant economic upheavals and security threats. The physical analog aspect of gold will continue to be valued by some investors and countries as a backup source of wealth in a world that is becoming more and more reliant on digital networks. According to Alden, the impact of fiscal dominance, discussions about debt ceilings, liquidity constraints, and possible tariff changes are some of the major macroeconomic themes that will influence 2025. Although the Federal Reserve's choices are still crucial, she thinks that the key factor influencing markets, inflation, and asset prices these days is fiscal policy. Anyone trying to make their way through the constantly changing financial world must comprehend these factors. As we come to the end of this video, remember to like, subscribe, and enable post notifications so that you may see more videos like this one. Please leave a comment below with your thoughts. And as always, happy investing.